Hello, ladies and gentlemen. Good day and welcome to the show. Listen, glad to have you guys here on this Wednesday, the 17th of February, 2021. Thank you for tuning in. Now, want to get started? I want to talk about silver. Silver's a big story in the financial industry. For years, they've been manipulating the price to the downside. Mostly J.P. Morgan, but you know what? J.P. Morgan has squiggled out of their short positions, and they're holding a lot of physical. There's 8 players in all of this, 8 big players, most of them banks, and they are actually short right now over 400 billion ounces. Meanwhile, the physical supply is in very tight, very tight. Now, there's players out there, big corporations and stuff that make things like cell phones, Apple, Tesla, the list goes on and on. Actually, I mean, I couldn't name them all. Chinese companies and everything, they use silver in their production. They even get a whiff or a hint that there's a shortage in the 1,000-ounce bars and the Dory bars. I can't begin to tell you. You know, they've suppressed this price so long. There's so much pressure on the price of silver. The price of silver in one day, if it takes off, could be triple digit. But what would that do to our financial system if that were to happen? But that's what it could do, quite literally. You know, and you guys see it. You got a warning right now. When you go to your local coin store and stuff, and they're out of a lot of different product, that should be a warning to you guys. And you see the price down really low like it is right now, running around 26, 27 bucks. There's something wrong, massively wrong in the silver industry right now. And I'm not talking about wrong in as they got excess supply or anything like that. I'm talking about massively wrong on the short side of the silver industry right now. Now, I want to address another thing I want to talk about real quick. We got all these people out there, massive amounts of them, who believe that this story, where the economy's not improving very much, and they believe that there's deflation out there, and they believe that the economy's going to deflate because the Fed just can't do it. For one reason or another, they just can't keep this thing going. They can't keep doubling down, and they believe there's going to be an 80% market crash, 70 to 80% market crash, and they believe that the economy is going to deflate and the dollar's going to go to the moon. You know? And I'm going to tell you, you've never seen tricks. Every time we hit the wall, from 2008 until now, and it continues ongoing, every time we hit the wall, the Fed always comes out with a new trick. And they say, oh, the Fed can't do this, the Fed can't do that. One of the things that they're missing is, and it's already been told to you by the Fed multiple times, that's why Ben Bernanke got called Helicopter Ben. He said, if we have to, we will dump $100 bills out of a helicopter. You imagine them raining down $100 bills on the city from a helicopter. They're practically doing that now. What do you think stimmy checks are? But they've already told you. They've said, our printer is unlimited. We don't have any restraints. We can, now that they got Janet Yellen on one side operating the Treasury, and you know how dovish she is, and on the other side you got Chairman Powell, and between the two they make a rotary press. You know, you got one on one side, the lender of last resort, you got the other one, the borrower of last resort, on the other side, and they can just spin out that money like, well, we got another 1.9 trillion coming. What does that tell you? So all these deflationists out there, you know, somehow they're in this thing where they actually believe it, that they're going to be able to print dollars to infinity, but somehow the dollar's going to go up in value. Something that has no intrinsic value to it whatsoever. The real true Ponzi scheme, because Bitcoin's not a Ponzi scheme, the real true Ponzi scheme is the dollar. But for some reason, they got blinders on. because it's so big and it's been the center of world trade for so long. They've got blinders on to what's happening around them, and they got this fantasy going out there right now to save dollars, moving the treasuries. It's a Harry Dent kind of philosophy, you know. And I'm not putting anything bad against Harry Dent. Harry Dent's very smart, but he's a deflationist. And the deflationists believe somehow that it's going to end up like the 1930s, you know, when the dollar became worth more. But we were on a gold standard back then. They were limited how much they could print because of the gold standard. This is why they seized the gold, so that they could print more. But we're not on any gold standard anymore. That ended in 1971. Now they can crank those presses up, and they don't even have to actually crank the presses up, actually. It would be better if they did, but all they got to do is push a button and enter out in how many zeros they want. They push a 1 and they just go 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0, 0. Let's add one more 0. 0. You know, I mean, this is the world we're in right now. And you're going to invest in that? This is why Ray Dalio said cash is trash. Now, I've been telling you guys all along, going back 5, 6 years now, I've been telling you guys, get your silver put away. Get your silver put away, I've been telling you. Get your gold put away. Get your Bitcoin put away. Put your Litecoin away and stuff. I've been telling you guys. So a lot of you have been listening. You got some socked away right now. You're getting ready to see, in the next little while, the biggest price increases you've ever seen in your life, but it's going to be tempered somewhat because you're also going to see prices go up on everything. But what it's going to mean is it's going to mean that you're going to be able to put food on your table and have a roof over your head. Or a lot of these people out there who are totally invested in the dollar, prices are going to go so high their paycheck ain't going to keep up and everything else, and they're just going to go flat. They're not going to be able to pay their lease on their car. They're not, and you know, I mean, it's never too late too, because we haven't seen the real price explosions yet. We haven't seen the hyperinflation yet, and what it's going to do to the dollar and what it's going to do to cryptocurrencies and gold and silver. We haven't seen that yet. It's coming. Let's get started and let's open up the charts right here and take a look at what's going on. Here's silver today, and see, this is why I say it hasn't gone yet. Silver's still only $27.06 if you can get some. Now, you're going to pay a premium, but it's difficult to get it. And, you know, that's because we got 8 of these guys that are controlling the market, and they're over 400 billion ounces short of silver. You know, and they're trying to get them to roll over their short positions and their long positions. The longs, they're trying to get the longs to roll over and not take delivery and stuff. That's what they're working at right now, you know. But I mean, this whole thing is just, honest to gosh, I mean, the whole thing is just, it could explode to the upside, quite literally. They knew this was going to happen a few years ago because they've been rigging these markets. These guys that are really the top-notch guys in all of this, you know, the cartel, they known this was going to happen. This is why J.P. Morgan put away a long position in silver. He's got physical. He's packing physical. And Jamie Dimon and them, you know, they know this is going to explode to the upside, and that's why they put stops in on silver and gold. I think it's a $3. I think the stop is at $3. Because when it starts to shoot up, they're not worried about it moving $3 to the downside. They want to limit its position to the upside. These stops kick in, gives them time behind the scenes before they have to start the market again. I think it's like a half an hour or something, or 15 minutes or something. The market will stop if it goes up like $3, you know. That's because they've been anticipating this. Back when they first put those stops in silver, I think it was like 2 or 3 years ago, they were anticipating this coming. It hasn't hit yet, you know, but when it hits, you're going to see these moves of $3 to the upside in just a few minutes. They'll stop it, hold the market, and then a few minutes later start again. It'll go back up another $3 sort of thing. That's what we're going to see happen. I think it's coming, and I don't think it's that far away. to tell you the truth. 27.05 for silver today. It's down 17 cents. They're still keeping this suppression going. They can't let it run away because there's going to be a lot of players that are going to go bankrupt within the system. And those bankruptcies will extend to other parts of the system. This thing could get out of control. In other words, silver could bring down, silver, because it's linked with gold, between the two of them, paired with platinum, the commodities could take the system down. And they know it. And of course, there's players ready to step in to try to stop that from happening, like the Exchange Stabilization Fund, the Plunge Protection Team, and etc. Okay, cryptocurrencies. Oh, we forgot to do gold. Okay, here's gold today, 17.75, and look at them suppress the price, down $18.50 today. You guys should take this as a blessing, and I believe you still can get gold. You know, at $17.75 an ounce, you might be looking at $8,000 gold in short order, and in the next, I don't know, probably maybe the next 48 months is all. And I mean, I'm thinking less than that, but I'm giving myself a little bit of headroom there, When I say in 48 months, I'm thinking it's going to happen in the next year, but there we go. I mean, and you'll look back and you'll say, I only paid $17.75 an ounce, or we might have to pay a little bit of a what do you call it on that, a premium and stuff, but still, you hold the real precious metal in your hand. Of course, fractional gold's a little bit more expensive, but you could buy a 1 ounce gold coin or whatever and keep it in a little package. And, I mean, it's only small, and it's something that's really, it's got no counterparty risk. All your other assets, if you're into stocks, bonds, all this stuff, all counterparty risk. You say, well, bonds don't have any counterparty risk. Oh, yes, they do. You're buying when you buy a U.S. Treasury bond, you are buying from a company. Basically, the United States is a company or a corporation. And that corporation is so deep in debt that they can never get out. What do you call that? You call it a bankrupt corporation. You're buying a bankrupt corporation. And how they're going to get out, because they got a printing press, is they're going to inflate the value away of those bonds. In other words, you're not going to be able to buy nothing with them. I mean, when an apple costs $100,000, what good is your treasury bonds? Cryptocurrency today, it just keeps going up and up. 1,540 billion, 1.54. Now, I told you guys, it took like 11 years or more to make the first trillion. Zoom, we're already halfway through the second trillion. So, the second trillion might take 6 months. The third trillion might only take a month. And the fourth trillion might only take 2 days. And so on. This is where it's going with crypto, and there's no upper limits to cryptocurrency. Tell me where the price limit is for what you can pay for a Bitcoin compared to dollars. It can go to infinity high. And with these guys buying in, these big billionaires are starting to buy in, these big corporations. They're going to drive it to a certain point, if they keep going, where it becomes too big to fail. In other words, if it failed, it would take down the financial system. They're going to drive it up to that level if they keep going with it. And all eyes will be on Bitcoin and the whole financial system. I see this. I'm going to tell you guys, I see this as a corporate takeover of the financial system. These corporates are getting in there, and they're grabbing their positions. Well, these corporates grab enough positions and get in there solid, so that they got a solid base. You watch the central banks try to hop in to get a piece of the action. And you talk about a price explosion, you start getting the big central banks start to buy at cryptos. You ain't seen nothing. Go right on buy $500,000 a coin. Bitcoin could, So there's a lot of people out there right now who's holding Bitcoin. They're thinking to themselves, oh, 51,000. And they're not rich people, They're people that work hard for their money, And right now, they might need money because they've been through this whole big crisis, Look at that price, 51,000, and they might have a Bitcoin or 2 Bitcoins, and they're thinking to themselves, "Boy, that could really help me out right now." You know, and it's going, and then they make excuses in their mind why they think it's going to go down. Oh, it's in a bubble and all this stuff. I'm going to sell mine, you know, and they sell it. And they might be so sorry later because you might look back in history and say, "Oh my goodness, I did have some Bitcoin, you know. I sold it when price was 50,000, you know, and I thought I was doing good, you know." And the people will look at them and say, "Oh, that was off. Oh, sorry that happened to you," you know. That's where I mean, that's where it could go, you know. Dow Jones Industrial Average today, 31,500. It's up 13 points on the day. It was down, remember, when it started, but she's up now, 13 points to the good side. Let's take a look now at crude oil. Crude oil is $60.06, so it's maintaining over $60. Did make it up to a peak of 61.23 there yesterday, you know, but now it's fell back down. It's $60.01. This is gonna continue to go up. I can see this continuing to go up, this crude oil. I can see it making $80 before that long, you know, from now. And you know, this is an oil-based economy, so this has an awful lot of an impact on the rest of the economy. But it is a commodity. Commodities are going into a bull market across the board. And you know, really, the coiled spring that gold and silver is, I can't begin to tell you guys what a coiled spring it is ready to go up. It reminds me of those toys they used to have in the old days, you know. They used to have these little toys made of plastic and had a spring inside them and they had like a suction cup on them. And you stick them down to the ground and the suction cup would let loose and the thing would go popping up into the air, you know. It'd take a few seconds though. You'd stick it down to the ground. It'd be like a toy duck or whatever. You stick it down to the ground, nice and tight, and then you let go of it. And it'd take like 5 seconds. And it would go pop! The spring would go and it'd go flying up into the air. That's what gold and silver are like now. They're like that. They're compressed spring, ready to pounce into the air. Go up, you know. Move index today. Uh-oh, the move index going up. Now, you know, I've been watching it lately. It's been in the 40s. All of a sudden, it's in the 50s. You gotta keep our eye on that move index. It's your credit markets. And if the move index goes over 75, it indicates instability in the credit markets. This is what the Fed watches right here, the move index. It's the first time. Day after day I come on here, it's in the 40s. All of a sudden, boom, it's in the 50s. This is what I tell you. When this moves, it can move awful fast. Bonds and rates. U.S. Treasury yields are falling today, but it's only insignificant. Well, not insignificant on the 30-year. 30 years at 204, and the 10-year is at 1.285. And we're looking at Treasury yields falling just a little bit. Take a little bit of the pressure off of them, you know. These Treasury yields going up puts awful tremendous pressure on the Fed. U.S. dollar index, 91.01. We got a rising dollar today. And this is all these guys out there right now who believe we're going to go through a deflation and the dollar's going to be worth more. And it's keeping the dollar solid. They believe really, what they believe is that the dollar is the only game in town. And they'll believe it's never going to be another game. It's only ever going to be the dollar. But, you know, fiat currencies have a life cycle. And generally it's around 40 years. And the dollar's long in the tooth, you know, and so none of them have ever lasted too long. They always go down in flames, fiat currencies. And the dollar's very long in the tooth. Listen, thank you guys for listening to my show. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the very next video. Bye-bye.